All right, everything looking good. We should be live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on Wednesday, February 1st, 2023. And as always, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right. What's up, Hex Evolve? Good to hear you. Appreciate that. So obviously we had our Fed meeting today. JPZ came out, hiked 25, as the market expected. We saw a little bit of bullish price action in advance. Then we saw a little squeeze to the downside on crypto. And then we're up about 5% since then on Bitcoin. So pretty aggressive move to the upside. Obviously, not a ton to see on the daily, but if we switch down to shorter time frames, and we'll go ahead and just jump right in with Bitcoin. If we switch down to our 4-hour time frame, we see as long as we've been in that 821, as long as we've been above the 200s and trending to the upside, obviously this is a play we want to be in. And we see on the futures chart, there is a gap left behind here at about 20,000. Typically, we're going to fill these gaps. We don't have to, obviously, but typically we do. But after this long consolidation period, we had a little fake out cross right here, or almost bear cross. And then we actually went sideways for a little longer. And Bitcoin is known to do this, where it basically, one of two things is happening right now. We don't know which one yet, obviously, because it hasn't played out yet. But here we put in our initial peak, and then we put in a lower high after that, but a higher high on price action. So that's bearish divergence. We then find support at the 21, move up, do the exact same thing again, print bearish divergence once again, and then come down lower. And now we're coming up doing the same thing again. So on the 4-hour, this is our fourth drive of bearish divergence. Now, what could happen? We just keep ripping to the upside and we just go on to new highs on the histogram, new highs on the stochastics, and then we invalidate the various previous highs here that corresponded to higher high on price action, but lower high on the indicator oscillators. That's always a possibility. So as long as we see just a ton of continuation, it doesn't matter. The price actually doesn't even need to go up higher. We just need the momentum to kind of catch up to it. If that doesn't happen, eventually we're going to run out of this just sort of melt up period, and then we'll see the actual retracement. Now, we talked about this a few days ago on our last stream. Was it Sunday night? And we talked about how Bitcoin is notorious for essentially just kind of like consolidating to the upside as the indicator oscillators trend back down. And that's what I call, it's not a real thing. I mean, not according to anybody else, but that's what I call a bullish reset. When we see essentially price action go sideways or up, while the indicator oscillators go down, it's just recharging, because then when they're ready to go up again, the indicator oscillators start going up. Price is already still at the same level or even higher. So that just sets us up to go even higher. Now here we are on the daily futures chart. We see we've made it above the 200 exponential. So we're above 200 simple. It still has pretty aggressive downside slope for now. All we have to do is just consolidate above it. It'll go flat and then eventually bullish. And then obviously we have flipped the 200 exponential bullish now. We're above it. Everything looks great. We just put in a new high since our macro low. So we put in a low and we're just pushing up here to see where does that low take us to. So right now we're getting ready to take out that previous swing position right here from mid-August. I'm sorry, well, about mid-August. And if we take out that point from mid-August, then we just start looking, at these next points up. And eventually it's going to take us up to, we're almost to 25 level, which was obviously our target. And then that takes us up, into the 30s. I think we have it actually sketched out a lot more accurately over here. So let's just look at our daily chart right here. So we have that first wave up, second wave consolidation, third wave up. It looked like we're going to consolidate and maybe back check, but we know what we're looking for now is the Fibonacci extension target. So we hit the 1.236, we consolidated there, we broke up, now we're at the 1.382. So 1.5 is right here, 1.6. So, it looks like we're headed up here. But the truth is, if we really just don't even focus on the little stuff, what I'm really looking at here, and there's a lot of different ways that you could have this drawn, but essentially, if we take someone was asking me about the fibs recently, and I don't know if people are like 100% aware of this or not. Most people are, but a lot of people have had like aha moments. If you click on your fib tool and you scroll down all the way to the bottom under style, you'll see there's a box here and it says fib levels based on log scale. If you're using log scale, you need to have that box checked. If you don't, your fibs are not going to line up like mine. All right, so that being said, once you click that box, and again, same thing down here, if you're not on log scale, it's not going to look the same as mine is. So if you're having issues replicating this on your own, just like let me know and I'll be glad to help you out. I think all the group members got it now, but a couple of people had asked about why their stuff doesn't line up the same. So that being said, so we have this basically descending channel right here. We broke out of the channel. At some point in time, we would expect, same way we broke above the 200 exponential and simple, we would expect eventually we're going to come back down and find support around those levels. We're going to back test something. See, this isn't constructive right here. The same way this is not constructive sell-off, it's basically just a capitulation. This is not constructively like building price action to the upside. We're not having like moves up and then coming down and then people are taking profits and then they're deciding to buy in, but buying in at a higher price. And then we're not really doing that. So we had a little consolidation here at the 200s, but that was more just eating through sell orders. And then as soon as we break up from there, we see the Bitcoin most, this is a very, very common consolidation we have where we consistently just basically build like bearish divergence, continue to trend higher. And then eventually we'll either, see another leg to the upside and keep doing the same thing, or eventually the bearish divergence plays out. Now, you don't want to bet against Bitcoin, in my opinion, and obviously none of this financial advice. You don't want to bet against Bitcoin when it's potentially breaking out of a bear trend that it's been in for literally years. And we've been in a very clear bear trend. You had all this time to short it the whole way down. Not the best time to short it right here as we're like breaking out, confirming bullish. So if we go back and look at history and say, okay, when was like the last couple times we saw a similar situation? I mean, that was right here. This was coming out of the bear market in 2019 at like 3,000. And we're at the equivalence of like 5,000 here. So if I told you right now, hey, you could go back and buy Bitcoin for $5,000, full on knowing that it's going to go to 70K, of course you're going to buy it. I mean, that's over a 10X. That's almost 15X. So that's what price action looks like right now. Now, arguably we should be looking at the most recent time when it happened, and that was like after the COVID capitulation, 4,000. And then again, we see what I'm sort of expecting to take place, where we like break here, consolidate, we get that aggressive push up to a new high. Tell me in the comments if you think this looks similar. We confirm the bull market. We have a pretty aggressive move. We kind of consolidate, but slowly just float up as we do. And then we get another burst to the upside. Basically like retesting key other levels. And then we eventually come back down. We retest the 200s. And then at that point in time, we consolidate above them. But we have some kind of a pullback, some kind of selling, some kind of profit taking, something. Now, could you have shorted this? Sure, of course you could have. But when you really zoom out and say like, hey, was this a good time to go short on the asset right here, right before it went on an epic bull run? Obviously not. Obviously not. So now let's look at this price action right here. And again, just for like perspective, and you know what we can actually do? No, because all the drawing tools, it'll just be too nasty. I was going to like superimpose the like little candlesticks on there, but I mean, we don't really need it. The point is that we consolidate at the 200s. We burst above it here. We consolidate. It looks like we're maybe going to get a pullback. Never happens. Too many people coming in and buying. And that's what it comes down to. We ran out of sellers. Now, do you need to own Bitcoin to sell it? No, you can borrow someone else's Bitcoin and then you can short it. So, we ran out of people that are interested in selling their own Bitcoin or borrowing someone else's Bitcoin and then shorting it. And again, it doesn't mean we can't go back down. And I do fully expect us at some point in time to have at least some kind of pullback to support. But right now, the last thing I would be doing, I mean, I don't know if this thing's going to go up from here. I know the system says we're starting to really confirm into a bull market. I mean, I could sit here for hours and we could talk about why assets definitely shouldn't be going to new all-time highs and, you know, all this stuff. We could do that for sure. And I could take the bear side of it. And, you know, my bias is still a little bit towards like, I don't quite trust this yet. But the fact of the matter is we know the system works. We know it works. So we got to trust it. Doesn't mean we have to go reckless in it. We just continue to buy into strength as long as we're above the 200 moving averages. And this goes for everything. You know, if you think psychology can really mess people up a lot of times in trading because they were thinking like, hey, maybe I should pick some up right here when we're kind of putting in this thing. And they're like, oh, I'll wait till it goes just a little lower. And then next thing you know, it starts creeping away and you don't enter into it. And then you're like, all right, I'll get it on the pullback. And then it just, you know, 3 days up in a row. And then you're like, all right, it's looking kind of tired here. So, you know, I'm definitely going to buy as soon as it goes down. And then it takes another leg up. And then you're like, oh man, should have just bought right there. Well, when it touches the 200s, I'll buy. And then it consolidates and it starts going, you know, and you feel that FOMO. And then next thing you know, you're like Peter Schiff, hasn't been in the stock market for like 20 years, or one of these guys like calling for tops, or, you know, saying that it's all BS and they're ranting on their YouTube videos or on, you know, whatever newscast they'll let them on about how the stock market's all rigged and all this. Well, if it's rigged, why didn't you just fucking buy? Just buy. If it's rigged, just fucking buy. I mean, it blows my mind. And that's the whole point right here is, you know, we could sit here on the sidelines and say we're waiting for a pullback or whatever. For sure, we definitely can. But let's go ahead and at least start dipping our toes in for long-term positions. And now we need to talk about time frames too. You know, we talk a lot about trading, scalping, swing trades. I talk about how the short-term trades turn into the long-term trades, turn into the positions. But what we don't talk about almost at all on this channel is investing. We almost never talk about just straight up investing. We're always talking about trading and scalping and trying to take advantage of momentum and, you know, risk reward setups and all that stuff. And then every once in a while, we talk about investing. So it just so happens we're talking about it on Bitcoin. I'm not saying Bitcoin is a good investment. I mean, it's definitely trash and is going to go to zero. But let's just say hypothetically it wasn't complete trash and it wasn't going to go definitely to zero, probably tomorrow. If we look at this chart right here, and, you know, we kind of mentioned it a couple times lately, and we talk about the risk reward ratio for, you know, losing all our money and it going to zero, or one day getting back to all-time highs. It's 200% upside, 100% downside. So that's 2 to 1. We're confirming into a bull market. I mean, and that's just assuming we go back to previous highs and never go higher. There's a lot of other stuff that looks even better than this. There's a lot of stuff that probably will go to zero, like actually, not just me joking. But if we enter into a position at momentum when it's starting to look bullish for like an investment, and when I say investment in crypto, I use that term very loosely. What I'm really talking about is, you know, when we make a long-term investment, and this is what I mean about timeframes. We make a long-term investment. I'm talking about like 5 years or 10 years or 25 years, or, you know, from now until retirement, and you don't ever plan on selling it. I'm talking about that kind of like investment. So the best thing you can do when you're looking for a good investment is, you know, look for fundamentals. Obviously, like, you know, you don't want to invest in some crypto scam or into a company that makes no money, that probably doesn't ever make any money. Like, you're looking for some kind of like fundamentals, some kind of earnings, or, you know, some kind of new technology. Maybe they have patents, or, you know, they're run by somebody that's a really good person that runs businesses, like a great CEO or something. Like, whatever the reason is, you come up with some narrative that you could build in your head. You could paint yourself a picture for why you want to own Tesla stock, or you want to own Lululemon Walmart exclusive sweatpants, or whatever the situation is. Okay. You build that case in your mind. That's your fundamentals. And that's great. You want to always have that if you're going to put your money in something for a legitimate investment, because you want it to be a good long-term. It can have some swings. It can go up. It can go down. It might have a bad earnings report or something like that. But over time, you figure this is a business. It's going to make more money. It's going to share that money with me. I'm part of a profit sharing by investing in this company. Or it could be some crypto that, you know, is going to change the world or whatever. You know, obviously just, you know, not if it's some total crap coin. So that being said, on top of good fundamentals for a long-term investment, we want momentum. And if you look at momentum on a long time frame, on just about anything that's not complete trash, it looks like this. It looks like this, you know, always up and to the right. And that's what you want. That's a technical way for us to pick an asset that we want to quote unquote invest in. Remember the time frames. So that should be completely separate from everything that we're doing on this channel on like a daily, weekly, whatever basis. And then when we do like the monthly setups and we start looking at our monthly charts and we're talking about stuff, that's when we should be looking at like stuff that we want to be like invested in, like blue chip stocks or, you know, major indices or whatever, you know, maybe you want a few percent in crypto or gold, or that's all fine. But it's all separate. Now, sometimes a scalp trade turns into a swing trade, and then the swing trade turns into, you know, a longer term position, and then that longer term position turns into a quote unquote investment. That's not always the case. That's the ideal situation because you usually get it at a really low price then, but that's not going to always be the case. So what we're looking to do is essentially pay attention to the overall long-term trend for like investments and the health and condition of the markets. But at the same time, we're trying to maximize the moves inside of that with our shorter term trades. So that being said, when we look at this monthly Bitcoin chart, you know, according to this chart, assuming nothing changes and it just keeps doing the same thing it's been doing, Bitcoin is always a good investment. And that's why you have people saying, hey, I just dollar cost average in a Bitcoin, never sell, whatever. And you could say that about anything, the Dow Jones, the S&P, like as long as it's just always going up and to the right. When it becomes concerning is when it goes through like a market cycle or like a longer period of time without putting in a new all-time high. So, you know, all joking aside, we're going to pull one up here as an example. And this is not me being mean. All right, so all joking aside, we're going to look at XRP. Because we could see, okay, yeah, sure, if you bought down here, you're fine. Because eventually you went to higher highs, right? It's like up and to the right. But the problem lies with this right here, this little guy. This was the 2017, 2018 high. This is when Bitcoin hit 20K. And then this right here is the 2021, you know, high. This is when Bitcoin hit 70K. So XRP went up here to like $3. And then when Bitcoin went from 20K, previous all-time high at cycle, to 70K, XRP went from, you know, maximum $3 wick to, you know, maximum $2 wick. So it only went back up 66% of that move, never went to new all-time highs again. So this is the start of a dead asset. Now, you could have argued when this happened right here, oh, well, it went to a high right here and then came down, then went to a lower high, and then it went sideways to down forever. And that's totally true. That's totally true. The difference is this is from 2013 to 2017. This is one cycle right here. So like if we took our, I don't know what's on this chart or when the last time we looked at XRP is. If we took our like time cycle analysis, oh, that's not the right one. Where is that time cycle analysis tool at? Oh God, I hate TradingView. I swear I can never find anything. The amount of hours I have put into TradingView to not be able to ever find anything. Okay, so this peak right here, and then we put it to that peak right there. This was that 4-year cycle in Bitcoin. And then this is the next, you know, and it doesn't have to be perfect, obviously, but this is the next 4-year cycle in Bitcoin, and it didn't put in a new high. So that is where, you know, danger comes in. That's when we have to legitimately worry. So yes, obviously XRP is terrible trash, only based on the fundamentals and the technicals. Other than that, you know, it has a strong case for being a cult. So that being said, the difference is you know, and again, that would just be the difference between this is our peak, that's our peak, that's our peak. So we have a high, a higher high, a higher high. So long term, based on what's happened in the past, and now keep in mind, Bitcoin could definitely go to zero and you could lose all your money and it could be a terrible, terrible, air quote, investment. But based on what it's done for the last, you know, whatever, 12 years, no wait, yeah, 12 years or whatever, since it was like 2010. So in that time, all it's ever done during these cycles is put in new highs and higher lows. So that is long term something that's technically and arguably like limited supply and all that stuff is like there's fundamentals there too, decentralized, etc. But that's how you can long term look at a chart and just say, okay, Bitcoin is something that I can understand why somebody might say you want to hodl this. XRP is something where it literally makes no sense. And the time when that should have been obvious was when Bitcoin peaked out and within a couple of months, XRP didn't. And literally like every crypto ever did. All right, so that's our like long term. So now if we go to the weekly time frame now and we look at the same thing on this weekly time frame, we look at this, obviously it's still going to look good, and we can use the 200s as a good gauge of whether or not we're in a bull market. As long as we're above the 200s, we're still in a bull market. Now, we don't have 200s back here, but I mean, we could imagine that they probably like look something like that. Like it's not crazy to, just be like, oh, I bet it was something like this. And, that's, oh, sorry. So that's basically, the life of Bitcoin. And it was always like, oh, well, we always find support at the 200s. Even if we wick down on that Corona dump, we're fine as long as we find support on the 200s. And right now we're below the 200s. This was that back test. This was the move that we planned on, that we expected, that we talked about, bear market through here on the weekly, or at least bear trend. And then here we flip bullish. The idea was, hey, we're going to burst to the upside, retest this high, and then eventually we'll be above the 8 and 21. They'll cross to the upside, and then we'll back test the 200s. That's our reversion to the mean. So right now, the market has to decide, okay? And by the market, I mean people buying and people selling. And there's no conspiracy theory. There's nobody out to get Bitcoin or anything like that. It's literally just everybody has money and they're either interested in buying Bitcoin or they're not. Okay. Their money came from a printing press, or maybe it came from digging up actual gold from the ground. Maybe it was illegally obtained in a bank robbery. I mean, it doesn't matter. The real question is there going to be by volume, by dollars, more buyers or more sellers? So we don't know. But what we do know is it's very, very easy for us to manage risk off this point, because one of two things is going to happen. We're going to get above the 200s here, and then eventually we're probably going to go to new all-time highs. So that's 176%. Or we're going to get rejected here, and then we're probably going to go to new all-time lows. So if that was just a trade right now, and you just said, hey, if Bitcoin goes to new all-time lows, I don't want anything to do with it, until it starts convincing me again. And then you say, but, I'll bet that it goes back to all-time highs. Well, that's 181%. That's 35%. That's 5.2 to 1 risk-reward ratio. Now, when does this happen? I mean, based on history, every 4 years, we put in a new all-time high roughly. So, we probably did a year down, a little change over here. So realistically, when do we go to these new all-time highs? What, in the next 2 to 3 years, probably, something like that. If it happens, maybe it goes to zero. I don't know. But I mean, there's a strong case to be made that now also what could happen is we back test this, we get rejected, and then actually we're going to go back down here, test the lows, and probably go to new lows. And that's completely fine. And it's easy to manage risk off that. Because if we don't get back above the 200s here, I don't want to be bullish long term. If we do get back above the 200s, I do, because we know what happens every time we're above the 200s eventually. So we just crossed this 821 to the upside. We're back testing resistance. I don't want to be a buyer at resistance. To me, this is a clear take profit area. We break down, we break below the 200s. We almost confirm into a bear market, on a weekly time frame, and then we back test that area. This is the bull's last attempt. People that are trying to buy, assuming that we'll go to new all-time highs, or trying to defend their current assets. Like if you already own 1,000 Bitcoin, are you going to try to buy up Bitcoin? Are you going to try to create hype? Are you going to try to market it? You're going to try to get people interested to protect your, 1,000 Bitcoins or whatever? If you're Michael Saylor, are you going to try to protect your, I want to call it an investment, but I think at one point in time it was down like 66%. So it's not really an investment. It's sort of like, you're like buying into Cathie Wood fund or something. Like, regardless though, of course you're going to protect it. Of course you are. Now he tried it a bunch of times when we were coming down here trying to buy it up and posting up, and it didn't work. It stopped working. But now we're back to almost those levels. I think 30K, 29K or something like that was his cost basis. So that's what we're looking at. that's it. That's the breakdown. That's the rundown. I'm not trying to like sell anybody on Bitcoin one way or the other, because what could happen right here? We could get rejected right around this area, or, somewhere under 30K. And then we roll over and go into a bear market and go to new lows, and we don't put in a new all-time high the next 4 years. And all of a sudden Bitcoin starts looking like XRP, and it is a dead asset, and crypto fails, and central bank digital currencies come out. And then, that's all possible stuff that we could talk about or whatever. But right now, we don't know what's going to happen. So we can just trust the momentum. And other people are going to trust the momentum too. And the funny thing about momentum is, it's like that Warren Buffett, like snowball deal. It's like, as the momentum builds, the snowball gets bigger and bigger and bigger and gets more and more momentum. And then it's more likely to just continue on in that trend. And that's what we're looking for. We're at the area where potentially this bullish momentum could start and could take us to new all-time highs. Or it rolls over and then Bitcoin's going to look really, really bad. Really bad. But you know what? For now, as long as we're above the 200s, we can keep trying to buy the dip. We can put a little money in once a week. We can open a trade on short time frames. But the fact of the matter is, and we're just looking at Bitcoin because Bitcoin had, some fun price action today and was just kind of moving in the last couple hours. But the truth is, this is a lot of assets right now. A lot of assets are doing this. Major indices are doing this. So, there's a strong argument to be made that we should start looking at this and saying, hey, regardless of my bias, regardless of fundamentals, regardless of, potential recession incoming, like maybe I'm wrong. Maybe it is bullish. Maybe it is, and that's my attitude is, what? I'm not going to sit here and just be stubborn when we have a system that we know works. I'm going to just trust the system. And then occasionally, I'll be wrong. I'll use risk reward, position sizing, all that good stuff, and it won't be an issue. So that is our Bitcoin daily. Let's go over to ETH now. So ETH, same thing. So, we break down, we're in a bear market. It's not looking great. And then here we are back on top of the 200 exponential, back on top of the 200 simple. We're flipping a blue. We just put in a new high off of the back test. See, if Bitcoin did this, had price action that looked like this, it would actually look a lot better than it does. But it burst straight through the 200s and then has just been kind of like consolidating, melting up. So the problem with this is what ends up happening when you get this type of price action is it keeps melting up. People don't ever get to buy the dip, and then it keeps melting up and we don't build like an actual structure. So then once it does get exhausted, once the buyers, once the, interest, the fresh money flows coming in start to slow down or stop, we can't sustain those price actions. And then when people do start selling, there's no areas of confidence that we can back test and find support. So we still have moving averages, we still have other areas, but with Ethereum now, we consolidate at the 200s. If this moves to the upside and consolidates up here, and then it has a violent pullback, when it comes back down, it has this nice area of support that it built. So having a horizontal consolidation, especially on top of support, is much, much better than having what amounts to, basically like a bullish wedge or ascending channel or whatever that just keeps taking legs to the upside. And almost always that's unsustainable. So now, obviously we looked at Ethereum now. Everything we said about Bitcoin is true for Ethereum. Everything we talked about just now about Bitcoin and the long term and going to, potentially new all-time highs. If you didn't check out the Ethereum video I did a few months ago, when we were back in this area talking about the risk reward of Ethereum, if it goes, in this case, not to new all-time highs, but a 1.618 Fibonacci extension. So from the previous high of this cycle, 2021, to the low of this cycle, which actually we didn't even get down to the area I was hoping for the low. But if we just pull this and put it at the low we did make it to, right here, and we look at the trade setup that we put in place, the 1.618, and we had a range is what it was, essentially somewhere in between this range. And I talk about it in that other video. So if you haven't watched that video, please go do it. But that gives us roughly a target up here of 14,500 to 20,000. Now, does Ethereum have to go to $20,000? No. Is Ethereum going to go to $20,000? No. It's probably going to go straight to zero because it's complete trash. It's digital fake money, whatever. But according to the technicals, if I told you this was Procter and Gamble, because we're not looking at the fundamentals. We're not talking about the fundamentals of Ethereum. We're talking about technicals. And technicals say, hey, there's a really good possibility this thing's probably going to 20,000 in its next bull run. And you're like, oh man, you need some kind of points to verify this or some form of reference or something like that. Sure, always. So if we go to the 2018 top right here, and then we go to the bottom, here, and we kind of double bottom right there, and then we just extend that out here, and then I can give you an example. Now, is it going to be the perfect example? Is it going to be the same every time? No. But in this case, we went all the way down, then we came back up to the 100 level, and then we went an additional 38%. So we went 138%, or the 1.382. So if we were going to do the same thing from this high right here to, not our hypothetical low, but our actual low, the 1.382 would be missing. Sorry. I don't know what the hell goes on. Does anybody see the 1.382? Okay, we just don't have that. We're just not using it. I mean, I swear somebody comes in here when I'm sleeping. All right, we'll just be adding it in here. Okay, so the 1.382 for Ethereum would be 9,594. Not nearly as impressive, but still $10,000 Ethereum. It's okay from where we're at right now. It's not bad. Does it have to happen? No. Did it happen last time? Yes. Does that mean it's going to happen this time? No. Is Ethereum going to zero? Probably. But, I mean, there's a strong case for it as long as it's on top of the 200s. We'll give it a shot. If we're going to take money and put it somewhere, I mean, could some random tech company with great fundamentals that's been around for 100 years go bankrupt and we could lose everything? Yep. Definitely could. Definitely could. So, I mean, as long as we know that when we bet on it. Now, is there a higher probability of a crypto going to zero than an actual company? Well, yeah, of course. Of course. So total market cap, looking like the Bitcoin chart, back on top of the 200s, looking beautiful. Once we cleared 1 trillion, which was our goal, the next target, basically support right here, resistance right here. So, that's just like a random line going back here. That was like the Elon Musk pump right there on the way up after the pullback. You guys know what's up. But this is not a fib. This is just a random line that I drew on here, just for reference, in case you're like, this isn't all my fibs. It's just random line. So that's what I'm looking at. That's my next target to upside is roughly like 1.6 trillion. So 1,160 billion. That's what it looks like. Now, does it have to happen? It's kind of doing that same Bitcoin consolidation thing. Not the best scenario. But, I mean, it seems probable. There's definitely a resistance there. Now, the real question is, how much of that is going to be from Bitcoin and how much of it's going to be from some trash shitcoin that I've never heard of? Let's take a look at the Bitcoin dominance chart. So here's everything, the weekly Bitcoin dominance chart. And that is essentially, our next resistance level is that 48% level. And we're at about 44% now. We're basically just trading inside this channel. We're in, a bear market, very much below the 200s. But you would expect Bitcoin dominance chart to essentially like always be in a bear market. I mean, maybe one day it will break above the 200s and move up. But like theoretically over time, if you were like the only human on earth, okay, you were like, Adam and, well, I guess you would just be Adam. So it's like beginning of time, okay? You're in the Garden of Eden or whatever. You're just killing time all day, all by yourself, right? You're 100%. It's 100% you dominance, okay? Adam dominance. You're the man. You're the only person in the whole garden. So then if like, God himself, or like you find like a lamp and you rub it and you get to make a wish, or, whatever your religion is, or maybe you don't have a religion, regardless. You find the lamp, or you wish to the God, or you eat the apple, whatever story you believe in. Then woman pops up, okay? Now there's two of you. So the you dominance is 50% now, okay? Because there's a whole other person. So like from there on out, theoretically, like assuming you don't, you guys like bang and eventually like babies pop out. Maybe it's a single, maybe it's a double, eventually over time, the you dominance is just going to consistently go down because, there's just more. Now, maybe there's a terrible fire and everybody burns up and, it's back to just you again. So maybe it goes back to 100% eventually, Bitcoin dominance, but all the other altcoins would have to burn up. Maybe some big regulation comes out and shuts them all down. I mean, I don't know. probably not going to go all the way back to 100% Bitcoin dominance. You would think over time it would slowly trend down, just like the U dominance in the Garden of Eden would slowly trend down because you have a mate and then, you know, she pops out some little babies. So great analogy. Glad you enjoyed that. Hopefully I made my point. So theoretically, this should just always trend down. You know, as long as the population of the Garden of Eden is going up, the U dominance is going down. And that's it. That's it. As long as the crypto population is going up, as long as there's more shit coins born every single day, which there are, there's like 20,000 now, maybe more than that. I haven't looked in a while. It's probably 25,000 by now. But as long as that's the case, Bitcoin dominance is always going to go down. So this is always going to trend to the downside. So when we consolidate sideways like this, that's essentially the equivalence of being like pretty bullish in something that just always goes down. So that being said, I don't expect this to like break out and go to new all-time highs. It can't go above 100%. So, you know, that's the max range, and it can't really go to zero unless Bitcoin completely dies. So it's essentially just range bound. It's just developing what that range is. So, you know, I told you that so that we could basically just say, hey, likely it's going to push back up here at some point in time, but we're inside this channel and it's probably going to trend down forever over time. So I wouldn't get too greedy with this right here. But this tells us, hey, Bitcoin's strengthening compared to all these shit coins. And we just had a nice little burst to the upside. So probably a lot of those shit coins are not moving and Bitcoin's going up. So why is that? Are people more confident in Bitcoin? Is there like, you know, like the news, there's like new networks in Africa and grocery stores are going to be using Bitcoin? And I mean, is it some kind of like fundamental event? Is all of a sudden Bitcoin actually like a replacement for gold? Are people afraid of inflation because, you know, the Fed is going to make some kind of mistake? I mean, whatever the situation is, Bitcoin obviously is more appealing right now than shitcoins are, which is honestly a little bit surprising because we've seen a lot of the trashiest trash in the stock market surging to the upside. And then we look at some of these shitcoins and they're kind of just going sideways. Now, a couple of the good ones, Matic, obviously nice move. I hit our target here. So that was a beautiful trade setup. Anybody took the Matic trade, you know, obviously took some profits on that one a little too soon, but I always would rather lock in some profits when I don't know what's going to go on. So that's it for the Matic trade for now, the 618. The next target to the upside, if we do get continuation, why do we get continuation? Because, I mean, we're in a bull market for sure now. So if we do get continuation to the upside, next target is that 786. So, I mean, I'm not saying now is a great time to take a trade setup, but, you know, from where we're at now to the 786, another 44%. So another 44% upside. You know, where do you have to set your stop loss if you were trying to take a trade? I mean, at least 2-to-1 upside. So you could set it right there. You know, if you put it down below the 200s, you're not going to get a decent trade setup. So, you know, this consolidation right here and then the leg up, you're banking that we don't break down below that consolidation now. So for a continuation type trade, you know, we need something along those lines. 3-to-1 risk reward trade setup. And the truth is, if we go back to the 786, we're probably going to new all-time highs. There's probably a new crypto bull market. That or like Polygon, you know, took over the metaverse or something. I don't know. And maybe just this one crypto is doing good and all the rest are trash. But I mean, that doesn't seem that likely. I guess it's possible. So BNB on top of the 200s, again, substantial underperformance. Why is this happening? Why aren't all of these trash coins going up? Why is it only Bitcoin? Is it manipulation? Is someone trying to pump up the price so they can dump their bags? Are people just not confident because we're not actually like ever having pullbacks because everybody's just FOMOing in? Sure, all those things could definitely be possible. BNB looking good for now. As long as it's above the 200s, it's looking good. If your favorite crypto is not above the daily 200s right now, start thinking, what is wrong with this crypto? Why is this trash? Why doesn't anybody want it? You know, does there need to be more cult members? Do people need to gain, you know, confidence in it? Is it eventually going to go to new all-time highs? Is it XRP and it has, you know, a reputation for not going to new all-time highs? So that's why it's, you know, a trash crypto now. I don't know. But I would look at that right now as we're coming out of a bear market, potentially into a bull market. I would be focused more on things that are performing well as opposed to trying to like buy the real scummy stuff. Because let's tell the truth right now, okay? Let's be honest with ourselves, 100%, all right? And this is hard because people don't like to be honest, not even with themselves. Shit, especially with themselves, okay? Let's be really honest right now. If you knew something in hindsight was going to overperform, are you going to buy that? Or are you going to buy the trash that's going to underperform? You're obviously going to buy the thing that's going to overperform. So if you're looking for something that hasn't performed yet, instead of looking at what's overperforming, you're doing it because you feel like you missed out on the big move already. And if you just buy this trash asset that nobody else wants, and I say that because it would be pumping if somebody wanted it, then honestly, you're just like, you know, you're either trying to get lucky, which that's fine. You can buy lottery tickets, whatever. You can buy, you know, trash coins or pot stocks or whatever. You can do that for sure. But be 100% honest with yourself that if you could have got the good thing, knowing that it was going to overperform at the low price, you would have got it. So why not get it at the higher price? What makes it, you know, it's got momentum. It's outperforming. Is it going to continue to outperform? Or now all of a sudden people are just going to be like, oh man, I don't know about this anymore. I'll just buy all the trash that's not performing. No, that's not the right mentality. In my opinion, you do whatever you want, obviously. But for me, that's why momentum is so important, because when assets go up, people buy into strength. Smart people do, investors. Or maybe you already are maxed out. Maybe you're already all in. And then you're like, well, what do I buy with? It's called leverage. People go to 5x, 10x, you know, options, 100x, whatever. So very important to keep that in mind, that we would rather be buying something into momentum, even if it's already performed more than other assets have. We don't want to just always be bottom feeding. Now it's fun to bottom feed sometimes, but let's be real. All right, so that's right. Climbing the wall of worry, 100% Hex Evolve. Let me know where you're at if you're in the chat right now. I'm curious. I always like to hear where you guys are located. This is a mad international community. I mean, we are like all over the world. So let me know where you're at. I'm East Coast USA. Obviously, you guys know. Down south. So Hex Evolve says, so clear now, but at the time, I did not have a clue when it dumped. No, not the XRP chart. I love you, Hex Evolve. That's so funny, dude. Yeah, I mean, this whole entire, like, I shouldn't say this whole entire cycle, because we did nail that XRP trade when it went down to 17 cents. That was like ridiculous. It was like right when it got delisted from like all exchanges and everything. That was pretty much the main trade that we took this cycle for XRP though. And then when XRP didn't put in a new all-time high, that's basically, for me, it's a nail in the coffin at that point in time. That's a dead asset. Now, can that asset be revived? Can it come back from the dead eventually? Yes, 100%. Matter of fact, while we're talking about dead assets, while we're talking about those sweet, sweet dead assets, that garbage that you don't never want to own, because it will just take all your money. Let's look at a dead asset right now. Let's look at the trashiest chart we can find on the whole internet. Oh, God damn you, TradingView. All right. So this is my problem with Intel, okay? And, you know, the whole, like, CHIPS Act, aka, you know, whatever you want to call it. I call it money laundering. It's easier than saying the Chips and Jobs Act or whatever. I just call it the Money Laundering Act. But whatever, sure, we should have the chips in the USA and blah, blah, blah. So of all the companies that we could pick to get all this money and all the amazing charts that we could have, okay, let's just say, okay, and everybody knows Intel. Intel's a big name. You know, they used to have the Intel Inside, like, ads and everything. You know, obviously Intel's in the spotlight now for the, what was it called again? The chips. Oh, that's right. That's right. We'll just call it the Money Laundering Act. So, you know, it's in the news for the Money Laundering Act. So essentially, this thing topped out in the year 2000. In 2000, Intel hit $75. Okay. It then proceeded to melt down with many other assets, you know, in the dot-com bubble burst, whatever, went to $13. Over the next, that's 2002. This is where it repeats again in 2020. So over the next 18 years, this thing slowly crept back to the upside. And then, I mean, I was pretty mean to Intel up in here as we're putting in this double top. I was speaking very, very negatively about Intel. I mean, let's be real. I was hating on Intel. was talking a lot of trash, okay, not just here on the internet, to my family, to people that liked Intel, telling them how trash this company is and how we definitely want to get out, and how it took 30 years to get back to, or 20 something years to get back to highs and didn't even put in a new high. Well, I mean, if there was any doubt in anyone's mind if Intel was trash, I mean, I would say it's a dead asset. In the year 2000, it peaked out. It took 20 years to get back to that level. It didn't even get back to the same level. And then, I mean, you could have said right here, hey, there's still some hope, but it's peaked. I mean, there's no question in anybody's mind if this peaked. We're under the monthly 200 moving averages, trying to backtest the 200 simple, 200 exponential, already negative. I mean, this is terrible, okay? This is absolutely terrible. But at least Intel paid a dividend this whole time. XRP doesn't pay a dividend. So at least there was some little bit of like hope that comes from this. At least you have like it cash flowing. So if you're going to buy some trash company, at least buy a trash company that has never put in a new cycle low lower than the previous cycle. So, you know, if you still look at this chart, technically it's up and to the right. This is just a really, really long consolidation. And then eventually it's going to put in a higher low than right here. And then eventually go to new all-time highs. And then, you know, everyone will rejoice. And that will probably be in like 2030 or something like that. And they will have probably like finally built a foundry and they're like up and running. And there's probably a new CEO by then and, you know, whatever. But that could be years into the future. But is there a case still to be made that one day Intel puts in all-time highs? I'd say so. For XRP too? Sure. But why? If you deploy your capital in Intel this whole time, and sure, maybe if you bought down here in the consolidation or whatever, and you got scared, but you didn't sell, you know, maybe you made 200% in that 20 something years or whatever. But I mean, that's worse than literally like, I mean, not anything you could have gotten, but you know, you could have gave your money to Kathy Wood and she would have lost it all. Never mind. Well, you get my point. All right, so where are we at? So the 210 spread, everybody's freaking out about. We've talked about that quite a bit. It's right here. It's starting to roll over. We know the main thing that we focus on that nobody else talks about is, let's turn off all of the craziness. Let's just make this chart go quiet. Shh, just be quiet, little chart. Okay, so here we are on the weekly. This is the spread. And we know, obviously, whenever we see one of these peaks, you know, and then we roll over into the next cycle, what we're looking for is not so much the inversion itself, but we're looking for when the 8 and 21 flip red again. The green turns to red. And there's going to be some bumps along the way. There's going to be some fake outs. But the green turns to red. Where was that? This was 2018 December, you know, 2019 January, etc., right before the Rona dumperoo. I'm sorry. Yeah. And then we see now we have obviously gone pretty parabolic to the upside, broke above that previous high right here. And while the spread is starting to contract, it's starting to roll over, what we're looking for is when the 8 and 21 flip bearish here on the weekly. Now, obviously, we're above the 200s, whatever. That's fine. You know, again, this is a chart that sort of like always trends towards zero. So taking out that previous high was a big deal. Being inverted is a big deal. But you're going to keep hearing people say, this is the most we've ever been inverted since we landed on the moon. This is the most we've ever been inverted since, you know, our first black vice president. Like, you can make up all kinds of statistics. I'm like, this is the worst yield curve inversion we've ever had, you know, and then just insert literally anything after that. Like, it doesn't actually like do anything useful to like come up with these like weird statistics and like make these statements that are factually true but also like irrelevant. So regardless of like when this is the worst yield inversion, whatever, until this crosses bearish, until the inversion goes from being, you know, inverted and then starts trending back down and the uninversion happens, which obviously will correspond with the momentum rolling over. Until that happens, we don't want to get like overly like crazy about like the yield curve inversion and all that like everybody else is. As this rolls over, you know, we would expect it to come back down, test a breakout line, and then decide from there. The same way we test like the 200s on the weekly on Bitcoin right now, and then we decide from there. Could go up, could go down. Either way, I would say honestly probably trends back down towards zero on a long enough time frame, just because the entire system, the financial system, the world, everything is based on lower rates. And I say that because everything is based on debt. And I say that because, everything that we have is basically borrowed from the future. I mean, what is debt? It's just a future promise to pay. So it's like, okay, well, why don't you just go to work and earn that money and then you could spend it? Well, I know I'm good for it. You loan it to me. I'll pay you back. That's all we're doing. We're just borrowing from future generations. That's all debt is, really. So the whole system's built on this borrowing. So, obviously a catastrophic collapse will come if we stop this borrowing. So anybody that's betting on the system collapsing or there being some kind of new system or whatever, well, let's just make sure there's something in place first. Let's make sure we have a parachute before we jump out of the plane because, the pilot said something mean, That's all I'm asking. Let's try to figure out what's going to happen. Set something up in advance before we start freaking out and make some bad decision. So that's how I look at what's going on here. So everybody's betting on the system ending and the dollar collapsing and all that stuff. I just don't think it's likely. I think a lot of stuff will happen that will be very clear puzzle pieces falling into place before suddenly the whole entire system just collapses and everything just goes to zero and, everything's fair again. And we're like on the street paying, like we're like cutting off little pieces of like gold off of the corner of our coins and, paying for ammunition so that we can like defend ourselves against Mad Max or whatever. Like, get the fuck out of here, man. That's just not realistic. Now, if a nuke goes off or whatever, sure, maybe something like that happens. It's a possibility. But I mean, let's be real. If the nuke goes off, I mean, we don't need to, who cares about our investments or anything? Like, I don't think TD Ameritrade is going to be like, hey, do you want that paid out in bullion? Yeah, do you want me to go ahead and cash out your retirement account? There's going to be some penalties, but I mean, no, all that's just going to be gone, obviously. All right, so TNX, retesting the 200s right now, retesting the lows, continuing to print bullish divergence, trying to build some momentum right here. I really want to see one more lower low. I would love for this to smash down here and hit 3.26%. At some point in time, we're going to get some kind of dead cat bounce, whatever. Seems likely it would be around there. Bullish divergence building, as a lot of other things going to upside are building bearish divergence. And again, these things can always keep going longer than you expect. So, we don't want to start betting on the reversal point because it'll just keep going lower and lower and lower. And then finally you won't bet on it. And then suddenly it will like surge to the upside immediately. And you'll be like, God damn it. I promise you. I know because I've done it before. Many, many times. All right, so U.S. oil, seeing some weakness. This thing was trying to build momentum back to upside, cross back down 821. Seems like we're going to come back down here and try to test the lows. If we put that ascending channel in place, ignore all the other 43 ascending channels or descending channels that we have. We look at this channel here, bottom of the channel right here, top of the channel right here, double top, bottom of the channel right here perfectly, back to the top of the channel perfectly. Seems like we're coming back down to the bottom of the channel. Eventually we break down from the channel, but as long as we're consistently putting in higher lows and higher highs, seems like we're going to try to come back up here and retest the 200s. Now you guys know macro, I'm very, very bullish on oil long term, but short term, I'm still very bearish on oil for at least a retest down to those levels. And I know the big narrative now is China reopening and this, that, and the other, and the economic activity, and I don't know, man. I don't know. I really don't know. I'm not sure. I mean, we don't get like good, clean reporting. I don't know what's going on in China. I don't know that there's a ton of demand for all the Chinese goods that there was before. I don't know that China's going to make a big profit, cranking stuff out at ridiculous energy prices. I mean, I don't know. I don't know enough about it to build this like amazing narrative how the China reopening is going to like propel the whole world. I think it's an easy narrative to sell because we can look at like 2008 and we can look at some of these other periods and say, oh, well, China's growth like got the world out of it by like its own expansion and bringing up all of its populace from, poverty into the middle class. Like, sure, definitely. But like China's not really in that position this time. Like things are different this time. They really are. Maybe it'll happen. Maybe they find a way. Maybe it's somebody else this time. Who knows? I mean, it could be the, onshoring / friendshoring that brings manufacturing and production to like various areas. I mean, it could be anywhere. I mean, long term, it could be something like India, but is that going to happen in the next 20 years? Or are we talking like 50, 100, 300 years? Like probably. So Dow Jones obviously had a nice push up here. It was looking pretty bullish. Still technically a lower high from our little peak back here in November. Pushed up here pretty aggressively. I mean, sold off a little bit and then actually like pushed up pretty aggressively. Looked like it was going to be a good close. And then we saw some weakness at the end of the day at the red slope line. We got to be real careful here. Got to be real careful here. Everybody's deciding. I mean, the Dow Jones only a couple % off of the all-time high at this point. I mean, it's actually pretty crazy. 8.37% off the all-time high. I mean, that's insane. That is insane. So SPX took out that little cycle high right here. Had a very powerful day to the upside. Looking, again, a little overextended right here, but this is what we're talking about when we come back down and bounce the 80 level and then we push up higher. There's not going to be any bearish divergence, though, on this because we already pushed up higher on price action and on the indicator oscillator. The longer term time frames too are looking like pretty good on this stuff. Obviously, everybody's been talking about this little inverted head and shoulders potential bottoming pattern. We've been talking about the divergence that has built up. We've been talking about the slope line flipping on the weekly. There's definitely a strong case to be made where we could go to new all-time highs. Part of the problem with the fundamental case for that, though, is I think that the inflation is what takes us to all-time highs. I mean, inflation is the easiest way to get back to all-time highs. Like, if you tell me, like, hey, we're going to, like, you know, build something, this snowman or snowball or whatever, and we're going to, like, work on it for months and months, and we're going to keep building it, and we build up all this momentum. Everybody's working on this, like, big project. And then finally it's like, okay, now we're going to reveal the snowman to the whole world after, like, you know, 30 people have been working on this snowman for 30 days straight, and it's, like, amazing. And then we, like, climax, okay, everybody busts their nuts, and we just show off this snowman, and everybody's so excited. Well, then afterwards, it's like the climax is done. All the momentum, everything that built up to it, it's gone now. Like, all the excitement, all the dedication, like, once you reach that point. And that's kind of how I look at, like, the high in these markets. Like, we had all of this, like, you know, we obviously melted down with the Rona dump, but we, like, you know, building up this, like, balls for the snowman, and it's getting bigger and bigger, and then friends are coming to help, and then everybody's getting excited, and then we're staying up extra nights, and now we're not even working on this thing 8 hours a day, you know, 7 days a week. Now we're working on it 12 hours. And then the last night we, like, pull an all-nighter, and everybody stays up, and then the news is there, and everybody looks at this amazing snowman we built. And then after that, it's like, sure, people get kind of excited, come back and, like, you know, put a new carrot in because a little raccoon came up there and stole its nose, or, like, you know, maybe part of it was melting, you pack a couple of spots in there, or some kids kicked it in the snowball junk, so you got to kind of, like, repair its little crotch region, like, I don't know, whatever. But, you know, the excitement is just never quite the same. You never quite get to that, like, that pinnacle, that peak. And that's how, for me, it's hard to imagine these markets reaching that insane exuberance peak without one of two things. Either inflation, because, you know, all it really is just, you know, the dollar's getting devalued, so everything else looks like it's going up in value in comparison, or whatever your currency is. That's inflation, how we go to all-time highs. Or, you know, building up that leverage, that excitement, that momentum, that exuberance. Like, we got to go through that all over again, that buildup, to get back to those levels. So for me, it's harder to believe that we're going to get the buildup, especially in stuff like crypto. Like, it's hard for me to believe that just all of a sudden everybody's going to be like, oh, who cares? We just lost all our money, our life savings with Sam Bankman fraud, or, you know, the FTX scandal, or Celsius, or, you know, insert every other crypto scam / exchange / you know, whatever here. Like, it takes a long time to get new people to, like, buy into this, and new money, and then build up the leverage and the excitement and, you know, the trust, and then the regulation. And it just seems much more likely to me that this is like a dead cat bounce in these markets without inflation. So if everybody's right and they're betting that inflation comes down and we don't get another spike in inflation and the Fed is soft landing this, and then we go to new all-time highs, it's probably because the money printer's back on. It's probably because, you know, and I mean, the main reason they would turn the money printer back on anytime soon is something breaks, something really big breaks, probably in another country, maybe in the USA, but something very, very important goes wrong. That doesn't seem likely to me, because what it looks like to me right now is Jay Powell is, like, solo landing a 747. Like, he's crushing it. I mean, he's doing it right now. And you're like, he's not landing it. He's It's a crash landing. The landing gear doesn't work. I mean, it looks pretty good to me. The market is not at zero. You know, unemployment is at like lowest levels ever. Inflation is coming down. The Fed is raising rates. They're reloading their gun right now. Okay, that's exactly what's going on. You're like, what is the Fed's number one weapon? You know, it's the race. What's their number two weapon? It's the balance sheet. So if the Fed can keep the prices on the markets and the economy in okay shape, like it's not completely melting down, we're not in a recession, things aren't crashing, businesses aren't like, you know, laying off, and you're like, they laid off 10,000, you're dumb. Sure, they hire 100,000, they lay off 10,000, and it's like, oh my God, Facebook lays off 10,000, they're going bankrupt. It's like, oh really? What about the 90,000 they didn't lay off? Like, everything's relative. And the fact of the matter is, Jay Powell is crushing it right now. His goal is to reload the shotgun, and there's two barrels on the shotgun. And the first barrel is interest rates, because what is the first thing the Fed does whenever shit hits the fan? They lower interest rates. And by lowering interest rates, I just had this conversation with my buddy the other day, and I felt like it was one of those like epiphany moments, okay? Monetary expansion, where does the money come from? Where does it get generated? Well, we know, we talked about that earlier. It's debt, right? That's where all the new money comes from. It's all debt. So everybody's borrowing from their future. Nobody saves up anymore. And then when they get enough money, you know, they get their $50,000 together and then they go to the car dealership and they buy the car. Nobody does that. Everybody takes out a loan. So the money actually gets created. The real money, the credit, the debt gets created by banks lending to people or to businesses or whatever. Because what's a business? It's really just a person that is like legally an entity. But it's really just a person. And they got big enough that they wanted to protect their own rights, their own assets. So they took legal protection and formed, you know, an LLC or, you know, incorporated, whatever it is. So that's really all it is. It's just people borrowing money. Some of them are called businesses. Other ones are just regular people. So that's where the money comes from. That's where the credit comes from. That's where the expansion comes from. So we need that to go to new all-time highs. So what is the Fed actually doing right now? Well, those banks loan money to people because they want interest. They want the interest. So if they want the interest, and that's why they loan the money, the Fed is trying to stop them from loaning the money. So they're trying to like tighten economic conditions. So the way they do that is by putting up the federal funds rate. So when we see the Fed funds rate or the target rate up at like 5%, and then we see the 2-year is at, let's say, whatever, 3.5%. If you're a bank and you say, hey, I can go put this money overnight every single day, every night, I just put it overnight again and I get 5%, not 5% per night, but, you know, 1/365th without, you know, compound interest, etc. So you go give it to them and you take no risk, and then they give you your money back the next day, and then you just go do the same thing again every single day. And then, you know, at the end of the month, it was the same as if you just did, you know, a loan to somebody else, whatever. So that's all it really is. The Fed is just incentivizing banks to take their, you know, safe collateral and then put it at the Fed instead of taking that same collateral and loaning it to customers. So they're forcing economic tightening in that sense. So that's the one shotgun, and that's what the Fed's doing. And that's that epiphany moment. Once you realize what it's all about, oh, so that's what it's doing. The Fed is bribing banks not to loan people money. Will banks still loan some people money? Sure. Are they going to make it harder to get that money? Are they going to loan it to less people? Are they going to have to charge more than what they get to safely loan the money to the Fed? Of course. So sure, they're going to give out some risky loans at 7% or 10%, even though they're only getting 4.5% from the Fed. But the majority of their money is going to get stashed where it's safe, and they can get that easy money, especially in an environment where Fed funds rate has been at like 1%, 2%, whatever. And now all of a sudden we're talking about 5%. Like, go ahead, let's do it. So that's what's going on in the first barrel. The second barrel is the balance sheet. So we know the balance sheet went up to like ridiculous, like trillions and trillions of dollars on the Fed balance sheet. So slowly behind the scenes, when nobody's looking, nobody's talking about the balance sheet, they're running off like $100 billion a month. So every like roughly year, or not quite, you know, $1 trillion comes back off that balance sheet. Now, how much of the balance sheet can they get run off before they have to start putting money back on and the QE comes back on? How high can the rates go before they have to start cutting again? And it doesn't matter. Every single day, week, month that goes by, the Fed is making positive progress. Jay Powell is landing the plane successfully. Like, I know people don't want to hear that. I know they hate it. I know they're like, any day, everything's just going to crash and go to zero. Or, any day, blah, 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 whatever. But, I mean, that's what's happening right now. So if the markets aren't going down, Jay Powell's happy. If the markets are going down, Jay Powell doesn't care. The only thing he has to worry about is if they ease so much, or if the government spends so much money, stimulates so much with these programs that it makes his job harder. But right now, it's going great. It really is. It really is. So the way I look at it is, the longer time goes by right now, that he gets to load up that first shotgun, pushes rates all the way up to 5%. Next time he could cut 4% off the rates, 400 basis points off the rates, and we're still at 1%. So we have a higher low than we did last time. That's an uptrend. That's great. And the same exact thing with the balance sheet. Like, sure, the balance sheet was at 2 trillion and then it went to 10 trillion, and maybe it makes it all the way back down to 8 trillion, but then he can go to 12 trillion. So, that's the trend. The trend is the balance sheet gets bigger. There's going to be some ups and some downs. But as long as they're decreasing the balance sheet and raising rates or keeping rates high, the longer that goes by, the more that it tightens, the more that money doesn't go back out into the environment. It basically just stops the inflation. Because what are we really trying to do? We're just trying to stop people from being scared that everything's always going to cost more forever. That's all inflation is. The last time I went to buy something, it was more expensive than the time before. So next time I'm going to buy it twice because I know I'm going to need 2 rolls of toilet paper. So I might as well stock up. And then next thing you know, it keeps happening over and over again. So that mentality gets ingrained in people's heads where they're constantly buying more than they need of everything because they're afraid it's going to cost more in the future. And then it further drives that. And then eventually they say to their boss, hey, I need more money because I can't afford the stuff. And if you don't pay me more money, I'll go somewhere else where they will. And then that's how the wage inflation can continue to drive actual inflation. But those are the 3 key points right here for everything. I mean, and you could put labor in there as well. But I mean, the things that matter are employment, inflation, the Fed's balance sheet, and interest rates. And right now, I mean, that's 4 A pluses for Jay Powell. He's crushing it. So, all right, I know nobody really cares about that, but I think it's very important that we pay attention to what's happening here. I mean, he's just sitting back enjoying that little podium BJ for sure. So SPY looks good. We don't really need to talk about these that much. There's not really that much has changed. They're starting to look good, starting to see some technical breakouts. We're going to look more at the sectors here today. Again, starting to see a technical breakout on the old ruddy. Looks like we're going to hit that measure move potentially up here to 2130. So let's talk about the different sectors. So energy is where everybody was at recently. Came up here, retested the highs, starting to see some weakness. We'll have to see. Seems likely it's coming back down to the 200s, and then it's going to try to keep this bull trend. We'll see what happens when we get there. This to me is not the whole China reopening and everything's going to surge and all this stuff, in my opinion, not being reflected in this chart right here. If that was actually the case, if the real smart people that know all about this stuff, not me, somebody way, way smarter than me that knows way, way more about China and what's going on, I would imagine, we would be seeing this thing like front running the actual like price of energy and stuff. But we're not really seeing that. So I don't know. Maybe tell China. XLI industrial back testing that move up here, slowly just putting in higher highs back on top of the 200s. We've been talking about the condition of these things relative to each other, and industrial is looking good. Probably going to be at new all-time highs very, very soon. And we know this is a strong component in why the Dow looks so good right now. 5% off the highs. XLF took out that high right here, consolidating above the 200s. This brings us back to the Bitcoin scenario where it's like, sure, maybe you don't think the banks are going to do that good. Maybe there's a strong fundamental case where we can make why banks don't make as good of money because, only 40% of their money comes from interest from people and the other 60% came from speculating in the markets, and they're not doing very well speculating in the markets. They're like actually like trash at investing. So they can't go higher. Well, sure, maybe, but I mean, something in the chart here tells us they probably can. So maybe they're just not always going to be trash investors. Maybe the interest on, their reserves or interest on loans or whatever is going to make up for it. I mean, the charts don't tend to lie. So there's something here. We don't know what the fundamental driver is going to be, but we know we're very close to confirming into a bull market. Same with Bitcoin. It's like, no, Bitcoin can't go higher. We can't go into a bull market because this, that, and the other, and the regulations, and the SEC is mean, and they're just waiting. whatever. Sure. Okay. Maybe. I mean, but if we sit around and just wait for the perfect scenario all the time based on fundamentals, I promise you we'll never get a good trade. Because by the time we know about it, somebody else already does. And the price has probably already moved accordingly. So XLV materials, again, same thing, reclaiming key levels, broke through here. I mean, this looks like it's headed back to the highs. XLP, consumer staples. We saw some weakness relative recently, but we're seeing a nice little bounce. It's trying to stay in this bull trend. It looks okay. Got to be real careful on this one because this is basically like safety sector. Same with a couple of these, like utilities, same thing. Utilities at support right now, at the bottom of this long-term channel. And like, honestly, like where do people flee when they're scared? They flee for like consumer staples and utilities and real estate and like these safety sectors. Well, if we go risk on right now and everything's just about to like surge to the upside, get ready for utilities, like the bottom to just fall out on this thing. Transportation, technical breakout right here above that cluster, the 200s, above the descending resistance and on its way. You guys know by the time we do these measure moves on like, you know, basically every asset that's about to break out right now, you know, 95% of the time, it's basically just a retest of the all-time highs. So if we're breaking through here, obviously there's going to be some steps along the way if this thing is going to just keep going up. But, you know, that was the 382. We just basically pumped straight up to the 0.5. Next target, 618. After that, I mean, 7.8, I mean, bull market, new all-time highs. I mean, XLK tech, same thing. Breaking through the cluster, descending resistance from the channel or wedge, whatever you want to call it. And then obviously the 200s. Seems like we're about to test this area. And then again, same thing. Bounce on the 382, the 236. New all-time highs soon? Maybe. I mean, but is it hard to build a case without inflation that we go to new all-time highs? No, not really. I mean, we could do it in a couple words, right? Maybe not a couple, but money printer go burr. I mean, I think that would work. I mean, the inflation would probably come back, but I don't think we need inflation to get all-time highs. So XLC communication. So we saw some big moves in communication. Some of these like B-Town trash stocks have been last few like days, weeks, whatever, have been surging. Just now starting to look good here. Getting above like 58. And then after that, I mean, this was the worst sector all last year. 55% back to highs. XLY, consumer discretionary. Again, this has been a dog recently. Starting to surge back up here. And I mean, this is directly tied to like the overall performance of financial markets like stocks, crypto, whatever. Because this is that extra money. And then Intel is still complete trash. We know that for a fact. That's a fact. Everyone agrees. Even Intel themselves is like, this is a shit company and we do make terrible decisions and we're definitely going to zero, but it's going to take a while. And in the meantime, we'll pay you a dividend. So give me your $29 and I will pay you 48 cents every year. And then at the end of 10 years, you'll have about $8 left. So net negative. And then account for inflation and you're really fucked. So you're welcome. All right, sweet. And so Intel, all in, okay? If you're new here, you know, that's how we do it. All in on Intel. All right, so gold is next. So obviously we saw a little pullback there, and then this thing surged again. I mean, this is confirming into a bull market. So sure, at some point in time, we probably have some kind of pullback, ideally to a higher low, potentially back test at 200s. But, you know, is it going to be a pullback from 2,500 back to 2,000? Or is it going to be a pullback from 2,000, you know, back to 1,800? I don't know. I honestly don't know. I also don't really try to time gold and silver. Like I have bought gold and silver at some of the worst times ever before. But I also just buy gold and silver like on the regular with no intent to ever sell it. So, you know, I look at it more as that schmuck insurance. And I know everybody's like, silver, sure, it's a safety net, but it's also speculative. No, don't think about precious metals like that ever. Because you will not make money ever trading silver. Ever. I promise you that. Because whenever it's a good time, whenever silver is popular and it's big and it's pumping, the premiums are so damn high that by the time you sell it and then try to rebuy it lower, it just never happened. If you're going to speculate, do it digitally. If you're going to buy actual physical gold and silver. Do it with the intent to never have to sell it. If shit hits a fan, you got to sell it, by all means. If it pumps to the moon and you got to sell it, by all means. But do not buy gold or silver physical with the intention to like speculate and flip it, because the premiums are just too damn high. Imagine if like you bought like a $2,000 stock and you had to pay like a $1,500 fee. I mean, can you make any money doing that? No, of course not. So silver retesting resistance, consolidating, still looks okay for now. It was starting to look pretty rough there, but as long as this goes sideways, it looks good to me. The longer it goes sideways, the better. GSG, so try to get back in that channel. It failed now. So we see clearly we operate inside this channel. We break down once, we come back up, and we can't ever get back to the top of the channel. Then we break down again to a new low, back test the channel, come all the way back down to the low again, back test the channel, come slightly higher, but again get rejected. So we really need to reclaim and stay inside this channel. We didn't do that. So more likely than not, we're coming back down to retest 20 bucks. And then realistically, we've tested it once, twice, three, 4, and then each time we just get less and lesser bump, and then eventually we're just kind of rolling along, and then eventually we fall off the table, and that's like slinky theory. We go down, the slinky's tail comes back up, we go down, slinky's tail comes back up, we go down, slinky's tail comes back up, we go down, slinky's tail comes back up, we go down. So blue box still. LNG, back testing key resistance, reclaim the 200s, trying to build up some momentum here. I mean, there's a big cluster of support through this area. We'll have to see. I mean, the whole LNG thing, long term, I mean, realistically, long term, nat gas is probably going much, much higher. Now, there's going to be some fluctuations along the way. Maybe fracking gets popular again. There's all kinds of like potential like ups and downs it could have along the way. Long term, I think it goes much higher. But short term, there was like the whole freak out in Europe and everybody was going to freeze to death and they were all going to die. And then there was going to be nobody left but the 1%. And then they were going to have to eat all you peasants. But that didn't play out. Just like we said, just literally like we said, there was literally boats of nat gas just like sitting off the coast and no facilities to like process it in. Exactly like what happened with goods coming into China. And then what happened after that, we saw a massive buildup of inventories. So is that the same thing that's going to happen with, liquefied natural gas in Europe? Is that what's happening right now? Yeah, I mean, definitely. We've seen it in real time. So Mosaic, trying to reclaim the 200s. Again, looking pretty sketchy, descending triangle. Need to get back above those levels, and then we can start retesting. Home Depot. So we had a nice little move off the 200s. We're back to that potential entry. So anybody that took the entry down here, congratulations on that nice little move to the upside. Eventually, if and when this breaks out, we got that 21% upside. Yeah, so, and above the 200s, again, just looks like it's ready to pop off. So AMD. So we had this descending broadening wedge trade set up. We had the entry right here at the consolidation, and it was 30% upside with the 10% stop loss. I didn't actually end up taking this trade, but not because I didn't want to or anything like that. I just honestly forgot all about it after we mentioned it on stream. And it had a nice little breakout and surged up here, gapped up about 5%, and then finished the day up about 13%. So very aggressive move right there. So nice trade to anybody on that one. Back above the 200s, they're basically flat. Seems very likely we'll see that consolidation. And now at this point in time, we bounced the key support. We reclaimed the 382. Seems like the 236 seems very likely at that $100 level. So Visa, we got the breakout. We're in the process of the measure move from the descending channel. We already got through the 618. Here we are at the 786. Next target 886, and then after that, retest of all-time highs. Lululemon, aka Walmart sweatpants company, back testing the 200s, looking pretty rough right here, but we do know when we slap on some fancy colorful stuff, we have a descending channel, we have an ascending channel, and we're finding support here at the bottom, and we have a potential trade set up for 30% upside right here. I mean, we'll see what happens. This one could fail. It's had a while to kind of consolidate this level and hasn't really done anything, so maybe it's just no longer cool. The day of the sweatpants is over. All right, ACV. So this is obviously trash. I decided the other day to light some money on fire, and instead it went up 9 cents. So congratulations, we did it. I mean, I fully expected this to just go straight to zero, but it looked like there was some potential there. It's up like 8 or 9% or something from the entry, so not bad. We'll see what happens. Probably go straight to zero tomorrow. Actually, I heard insider information that it's actually already at zero. As soon as the market's open, it's just going to gap down. So we'll see. But you guys can all laugh at me because obviously I tell you about all my trades in advance. So yeah, we can all have a good old laugh. Now, if it goes in our favor, I mean, who knows? This could go to gazillion dollars, and then we'll just fly you guys all out. We'll buy it. Oh, I don't know. We'll buy an island. Maybe we want to stay away from some of the current islands for sale. We've got some bad juju. So the initial target on this one, it's not just straight to a gazillion or zero. The initial target on this one is the back test of that resistance right there, which is essentially like another 15%. But realistically, we're looking to touch tips. We want to touch a tip of the 200 exponential or simple, possibly both. 42 to like 60% upside here. Little sword fight. Netflix, just raging. So the last trade setup we took on Netflix was that little 46% pumper up here that got back above the 200s. And then I kind of just, all right, there's definitely a flaw in my game sometimes where after I take profits on something, I just kind of like never look at it again. It's like some hot chick you're trying to hook up with and then you finally got it and it wasn't all that hot. And then you're just like, I'm not even interested anymore. That's like how I feel about trades sometimes. It keeps me from getting biased and falling in love with something and being like, oh, I'm up 60% on my Tesla trade. I love Tesla now and it's amazing. And I got a Tesla sticker on my laptop and I put a Tesla sign in my front yard so everybody like knows how much I love Tesla. And I got a tattoo of Tesla and I show it to everybody and it was paid for with my gains from Tesla stock. No, just it helps to stop that. So Netflix, does it look like it's going higher? Yeah, it probably does. Probably goes to 407 here. Strong case for this. I mean, it's just consistently putting in higher lows. So I told you that story because occasionally, and this is a specific case where, obviously this has looked pretty good for a while now. And realistically, I should have took profits and then rebought on the back test of the 200s. I didn't. But it happens. I mean, all this was just a chump trade. Okay. This was just that gap fill. We were just looking to fill the gap from the capitulation. It's the same exact trade with Meta, which we'll talk about that one in a sec too. Obviously it went crazy. So it's not that hard. We're not like doing super complicated stuff here. It's like, oh, there was a big old gap in the price. And then we said, hey, if we could keep moving up here, I bet we fill that gap because there's no price action right there. So, and then it's like, oh, look, it worked. I mean, pretty simple. I know I make it sound fancy, guys. And I draw a lot of colors on the charts and everything. And I talk about stuff for long periods of time, but there's nothing to it. So Snapchat, obviously we were looking for the back test of the 200s and this gap fill right here, that's the one we're playing right now. That's the one we're going for. Maybe you missed out on the trade and you were like, oh, I should have took the trade. Well, the gap down today or yesterday or whatever, back to the entry. So if you believe in the trade, if you wished really with your heart, with all your heart, if you went to bed and said, Lord, if you will please just bring down Snapchat price back down to the entry so I could just have one more shot so I can get my nut. I promise you that I would buy it and be an investor until it hits my target and then sell it and never touch it again because it's dirty. You got your wish. It happened. It did it. So that's it. 50% for that gap fill. And then if that gap fills and we consolidate, maybe we fill this gap right here. So 50 to 130% guaranteed, or you lose all your money immediately. Either one. Could go either way. I mean, it's 60% upside. It's 17% downside. It's 3.5 to 1. If we get the big daddy trade, it's 132 with 17%. We're talking about 7.82. This is, I don't want to say alarming, but I mean, it's definitely red lights flashing here. We got the sell by sell, the bearish divergence signal at the top of the range. Usually right after this, we get like an aggressive dump, but it just happened. We just got it. So I don't know. Maybe this is going to be some kind of false signal and Snapchat just goes to $1 gazillion. I don't know. Probably zero though, honestly. I'm an investor. I invested. Okay, so let's look at our, we're we're not going to not look at Meta, obviously. So DXY continuing to just melt down straight to zero. We're almost at our target. I know it's been taking a while, but somewhere along the lines down here around 99, something like that. We can kind of try to like line these up and see where it's going to go. Where it stops, nobody knows. I don't know. Somewhere around 99 to 100. Putting in bullish divergence. Doing it at the same time TNX does. Doing it at the same time that a bunch of other assets put in bearish divergence. Seems like we're going to get a reflex rally in this and pressure on everything else. And then that's when we're going to get that amazing opportunity to buy everything that's already moved, the strong stuff that moved without us, or, maybe it moved with us and we want to load up more. That's when this pops off to the upside, that's when we'll get the opportunity to buy all this other stuff. When is it going to happen? Obviously tomorrow, while everything else goes to zero, this should bounce pretty nicely. So could take 2 or 3 days. I don't know. Let's not count on just tomorrow, because you might be in a different time zone than me. So you might already be in tomorrow. So it's actually the next day for you. Tesla, T-Nasty. So we took profits on Tesla. I told everybody in the group. I think I told you guys live on stream I was taking profits. So we got the initial entry off the bottom down here. It actually, for whatever reason, it says 107, but let's not exaggerate. It was like 108.91 or something. And then we got the second load up at the 821 cross. And then by the time it was all said and done, you add it up and then, divide by 2. We basically had like 50% gains on this. So congratulations. If you did like me, you did one entry at the bottom and one continuation. You basically ended up with a 50% move on 20% of your trade account. So it's pretty freaking good right now. I mean, like, I can't even tell you how exciting it is to have already logged in like 10 to 20% gains on our trading accounts in January. Without even taking I don't want to say without taking any risk, but if I can risk, I think the most risk on we were in January was I think 40 or 60, depending, 40 to 60% of our trade account. Yeah, that's amazing. That's amazing. So that being said, yeah, the juicy gains, the potential pullback, it's got a lot of potential to move up here to 200s, the heart line. It's definitely some stuff. For me today, honestly, I took a lot of profits, closed a lot of positions, hedged some that I left open for tax purposes. I'm not a tax advisor, so do your own stuff. Don't listen to me. But mostly just because of the Fed meeting. I mean, and earnings. Tomorrow is a big deal for earnings. I just don't honestly for me, it's a coin toss. If I'm up 50% on something and you're like, oh, but you might miss out on a 10% gap up if you're not in it, but maybe you just get back all those gains. I'm like, no, thank you. I'll just cash out and just wait here on the side of the road with my thumb out, because there's another car coming around. So Microsoft pushed up to the 200s, broke out from the descending resistance. Looking good there. And then Apple. Back test the 200s. We closed the short right here on the back test because it looked like it was going to keep running, which sure it did. So that was a good move. We've got to be careful. Apple earnings are tomorrow, the 2nd. And then Google at resistance. Took profits on the Google trade. It actually moved up today after we took profits. So you're like, oh, we just missed out on everything. And we just made some fat profits. So could it keep moving up here? Sure, definitely. But again, earnings tomorrow. So we have Apple and Google, 2 moderately sized companies. And then obviously Meta, we got today. And that was that. It gapped up here. But essentially all it did was when it came down and bottomed, moved all the way back up, moved up to the 200s, and then realistically, I have this on my other chart, but not on this one. We pushed up to the 236, and then we gapped up from there to the 382, and then the next move would be to the 0.5, which is where that gap up was after hours. So it took it up to 185. So if you just think about it, we bottom here, we touch at 236, we confirm the bottom is in. That was our initial gap fill, that first trade. And then after that, we break through there. We backtest the next key area. That's the 382, the 200 exponential and simple. That's our first target for the second trade or continuation. And then the gap up is the final target or third. I mean, not even final. Shit. I mean, it'd go to the 618 and then just keep going after that. Probably just goes to zero though right now. Probably already did. And then last but not least, we have Amazon. Once again, Amazon reporting tomorrow. So we have Apple, Google, and Amazon all reporting tomorrow. I don't know what it's going to look like. Amazon may have a net negative year, so that's not good. Google, ad revenue, I don't know. We'll see. We shall see. So Amazon's got that potential gap up close right here. So, and we know how these things have been doing on filling gaps. Very consistent. So, and that's that second trade setup, and that'll be up 31% from the entry. Already logged in 20. So, yeah, nice start to the year. Nice setup. Pat yourself on the back. I mean, let's be real here. If you didn't lose last year, because everybody was pretty much a loser last year. I shouldn't say everybody, but a lot of people were losers last year. If you didn't lose last year, and then on top of that, you're already up big this year. I mean, let's go. Let's go, guys. Off to a good start. So let me jump over in the chat here, and then we'll go ahead and wrap it up. All right. So Hex is breaking out. Uh-oh. You know what that means. If you haven't said what's up in the chat, go ahead, let me know you're listening. Digital Durwood says, home of chemical. That's right. The good old chemical, man. We'll have to pull up some uranium later in the week. They're actually looking pretty good for reclaiming the 200s. What's up, Parag? Good to see you from the Midwest. Can you cover Wayfair, Roblox? Hexaball said, maybe Powell crashes a 747 in a ball of fire. We have to start up the money printer. Could you not just see him parachuting down? Like they always talk about the airdrops. You see him just in a parachute with the money printer just burring, shooting out dollar bills, yo. Shooting out $1 trillion mint of coins. God, when people say that, freaking retards. If I hear anyone credible, legitimately with a brain in their head, talking about mint the coin, I will open hand slap you in your face. What's up, J-Hoff? Good to see you. Calma Betty said, what's up? How are we doing on time? About an hour and 30 in. Yeah, we could take a look. Actually, Wayfair is not a bad idea, because I do have a little something going on here. I think it's been a while since we talked about this on stream. Matter of fact, I think the last stream trade we had was stopped out. Yeah, it was too. We fell just short of the target back here, and then came down and hit the stop. So theoretically, you should have got out at break even, but went down lower there. So let's zoom out and take the long-term look at this thing. Absolute disaster, obviously. Consistently putting in higher lows since 2015. So we have the low in 15, 16. We have a low in 20, and then the meltdown, and we take out that low. So all the structure that we have built, destroyed. Now, that being said, we have the internal retracement now from the low to the high. Came all the way down to 786. And we spent 1 month, 2 month, 3 month, 4 month, 5 month with a hard floor at the 786. And then we saw the moon party. Whoops. We saw the big old moon party. And that was basically January, 78% upside. Hard buy signal, bunch of green histograms. Trying to work on continuation. So if we do this one is really not that useful for anything, honestly. The green one. The blue one is really where it's at. The green one was just from this wick right here. So if we do an internal retrace from the top to the bottom, once we clear the 236, the next target should be the 382, and that lines up with the blue 0.5. So that's about $76 as the target from there. Now, unfortunately, when something moves like this, it's a little scary to get back in. But the same way, this was essentially like support back here. Sure, we broke down from it, but once we reclaim it, we'd expect that area to act as support again, because there was a clear reason, you know, it held up price at least for a while. So we're still below the 200s, trying to reclaim them right now. You know, arguably could just rock the same thing. Now, obviously, it's moved a little from that entry before. Ah, man, that little gap right there. Oops. That little gap right there could be scary. What am I doing? Just because it's really going to F with our stop loss. Because basically, if we take out the low, which is normally where we'd put our stop, you know it's going to gap straight down, and then you're going to get filled like at the bottom of that candle. So there's not really a trade setup we're going to be able to enter into this because we have that gap. Now, if we come down and fill that gap, that would be a nice entry off of the 200 simple. Alternatively, what we have to do is like build some kind of constructive move up here and then consolidate. But there's not really a good way, like trade setup wise, there's not a good way for how I trade to get into this right now, because the support area where we would need to hold is, I mean, here's the thing. You could take a trade right here and it probably will work out okay. Probably. But I mean, if you don't, it's like the type that just wrecks you, because you know it's going to like fill your order at the bottom. You already know. Coincidence? I mean, there's just nothing there, because if we hit that initial target up, it's 20%, and it's 20% down right here, assuming the gap fill doesn't happen. So there's really just not a good way to enter Wayfair right now as a trade, in my opinion, because of that gap. Now, we filled part of it, but man, I don't know. That's such a brutal. It's too late to jump into this right now, in my opinion. You're just so much better off letting it kind of go sideways or up and then buying support at the 200s, which, I mean, you could buy it right now and just be like, oh, I'm expecting continuation. It's just really risky and probably, you know, backfires. But I mean, 77 as a target and then realistically probably 100 definitely seems possible. I mean, it's like about a 50% move up to $100 from here. But with earnings coming up too, oh man. I mean, that's a real gamble. It's not really like a legitimate trade setup here, in my opinion. So, all right. Alma Betty says, I'm still here waiting for 10K Bitcoin. I mean, you could get it for sure, man. That's why I don't like waiting, though. I don't want to have to wait until it goes to 30K and then back to 10K to be like, told you so. And then I'm like, wow, I mean, it's at 10K now. Might as well wait till it gets back down to 4K, right? Then you end up missing out. Not me. Oh, man, Bitcoin's looking brutal on the 4-hour right now. God. If that was legitimately just like a massive squeeze right there, that's so dirty. That's so dirty. Got another subscriber back? Yeah, I think I did. I picked up one more subscriber. So I think my monthly is not negative anymore. I don't know what I said that made somebody mad or a couple of people mad or whatever, but I'm sure it was funny. I thought it was funny at least, so it was worth it. It was definitely worth it. I mean, I'm not going to lie. When I started this channel, I did not realize that it would take this long to get any amount of subscribers. Not going to lie. All right, I think we're going to wrap it up there. So appreciate everybody tuning in today. It is Wednesday, 9:41 p.m. Eastern Standard Time. Please remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. We'll be back on, not Friday, Sunday. I'll see you guys Sunday evening, 8 p.m. That's it. Yeah, I do have quality subscribers. That's the truth. I'm like mean enough to like all the like shit coins and like dumb people that they go away. And then only like the diehards are here. So they all appreciate my foul mouth and dad humor. All right, everybody have a great night. Peace out.